Welcome back. Let's talk about individual stocks. Siddhartha Khemka, the head of retail research at Motilal Oswal, is with us on the show now. Siddhartha, thank you very much for joining in. I want to start with Credit Access Grameen. Now, it's one of the big winners for the day. Can you tell us the big picture narrative? We've gone through the individual details in the numbers and how they've, shared. But can you tell us if someone has to buy it for 5 years, why Credit Access Grameen over its peers?
Yeah, very good morning, Rima. So if you look at the Indian microfinance industry, we believe that the sector is entering a growth phase, and we expect the industry to post a healthy 20% loan CAGR over the next few years. This, along with the improvement in asset quality and expansion in return ratios, should create wealth for investors in the space. Industry, we have seen that in the past, have faced both challenges in terms of growth and asset quality during the COVID-19 periods. But from there, the sector has reported strong recovery, especially if you look at in terms of the growth in disbursements, in terms of asset quality. And we believe that the NBFC-based microfinance companies, they have improved steadily their market share to 40% as of FY23 from 32%. And within that, if you look at specifically Credit Access Grameen, we like the company because of its strong focus in the rural areas. Almost more than 80% of the gross loan book comes from the rural areas, where the company has robust process discipline, which ensures that along with use of technology infrastructure, ensures the asset quality to remain healthy. So overall, because of this focus in the rural space, we believe that Credit Access could deliver a strong 23% AUM CAGR and 29-30% PAT CAGR over the next few years, which should enable the company to deliver ROAs around 5%. So we are expecting about 4.9% by FY25. And on back of that, we believe that valuations, given the strong growth and the sharp improvement in return ratios, they are very much comfortable at current levels. So that gives us a good upside for Credit Access. We have a target price of 1660 from a one-year perspective.
1660 on Credit Access and a positive view. Got that, Siddhartha. Hi, Surabhi here. So let's focus on another stock that you've picked out, and that is Havells. And this is a really interesting one, right? We have the numbers, of course. We've all seen what Polycab has done, the way that stock reacted after the Q1 show. Interestingly, Havells in between also mentioned that they want to get into the EMS space for export markets. EMS has been a huge bandwagon for the market, we know that. So put it all together for us. What's your thesis on Havells? I think the one thing it has going for it is that the stock hasn't done too much. 12-month basis, it's up only 6-7%. So at least maybe there's some valuation comfort.
Yeah, Surabhi. So if you look at, it's in a very interesting space, the Indian appliances and consumer electronic industry. We are expecting a 10% CAGR in the next 5 years. Havells is the largest player there with among the listed players, it has a diversified distribution channel. The acquisition of Lloyd in the past has given its entry into the lucrative the home appliance segment, especially the room AC segment, where its market share is around 10%. With that, Havells has now almost more than 20 products through its portfolios across categories. Q1 results, again, what we saw with Polycab, the wires and cable segment was pretty strong. However, the consumption, especially in the consumer durable space, the demand has been muted. Margins have started inching up, so the raw material pressure is kind of coming down. So EBITDA was up 11% for the quarter. Cables and wires, as I said, surprised with a strong revenue growth of 11%. EBITDA was 11% above our expectation for the quarter. And the management has indicated that while the rural demand is kind of improving, urban demand was better because of the improvement in construction cycle. And we are expecting the rural demand to pick up from H2, which should help overall growth. So overall, we are expecting that Havells should benefit from the growth in the white goods space. and especially the strong momentum that we are seeing in the real estate market, that should propel the core wires and cable segment. And we are expecting a strong earnings growth of EBITDA growth of 27% and EPS CAGR of 29%, supported by earnings growth. So that should help Havells benefit because of its market leadership across and a diversified portfolio in the appliance segment.
State Bank of India, that's the one you're betting on in the banking space. Can you tell us why you've picked State Bank of India over others? And after the recent run-up that we've seen, how do the valuations stack up of State Bank of India versus historical levels and even versus peers, if one has to make a comparison?
Yeah, Rima, so we have already seen some of the larger private sector banks coming out with numbers. ICICI gave us a good numbers. Kotak, despite having strong numbers, the market has now reacted negatively. We are expecting stronger earnings growth from PSUs compared to the private banks, and that is what led us to pick SBI. The results are not yet out, and we are seeing the kind of adverse reaction. So a lot of these companies, the reaction to results are happening pre-results itself, and post-results we are seeing a very varied kind of reaction from stocks based on what is happening in the derivatives segment, and that is leading to a kind of a divergence in terms of stock price performance. So we are trying to see that we are expecting SBI to report strong earnings growth of almost 1.2x. The net profit should be about 138 billion. This should be supported by healthy treasury gains. The bank has one of the best liability franchisee with a CASA mix of 44%. Asset quality is further expected to improve. If you look at PCR, one of the best PCRs at 92%, which includes the TW, that is technical write-offs. And if you look at valuations, we believe that valuations, given the strong earnings of the 15% earnings CAGR over FY23 to 25, we believe that the company should be doing pretty well in terms of delivery, in terms of stock price as well. And given that valuations are yet comfortable compared to the private players, we believe there is room for upside. So we have a target price of 700 on SBI, and we see decent upside in SBI in the coming years.
Okay, thank you very much for that. We'll slip into a very short break. On the other side, we'll get chatting about Tata Steel and SRF. Both of them will be reporting numbers today.